Hey everybody, welcome back. This video is the next kind of step. It's a natural progression from our discussion of the predetermined overhead rate from Chapter 3 when we talked about job costing. So what activity-based costing is effectively a more advanced way or a more accurate way to allocate overhead. So when we talked about overhead allocation, when we used the predetermined overhead rate, we talked about using a single activity driver. And we talked about how selecting that activity driver was really based on how your company operated, whether you would use something like machine hours or direct labor hours or direct labor dollars. The reality of the situation is that a single overhead driver might not necessarily be the best way to allocate overhead. As your company expands and evolves and becomes more diverse and has more and more of its overhead, or more and more of its total cost becoming overhead, that single driver may not make sense anymore. It may not be indicative of your total overhead cost. And the reason that this is important is we need to allocate overhead accurately, especially when it comes down to making decisions like, should I drop a product? What should I charge for a product in a multi-product firm? Which one's making me more or less? At the end of the day, it's all going to end up on the income statement, but if you're using it for management decision-making purposes, you need to be able to allocate that out as accurately as possible. Now, when we talk about activity-based costing in comparison to traditional costing, there really is a trade-off in terms of cost-benefit ratio. So activity-based costing ends up being, if you have a diverse company, extremely more accurate than a traditional costing approach. The offside or the offset of that is that it's quite a bit more intensive, it's more costly, more time consuming, a lot harder to implement. So there are some downsides to activity-based costing versus a traditional costing system. So really based on the type of company you are, the size of your company, the complexity of your operations, that's going to determine whether or not you have the resources or whether it's worth your time to institute an activity-based costing system. Now, what is activity-based costing? Effectively, what it does is it takes your overhead, okay, and instead of just saying, hey, I've got this one lump sum of overhead and I'm going to pick a single activity driver and allocate it all out, the theory behind activity-based costing is that your overhead is made up of a bunch of small activities, things that you do, events, transactions, work sequences that generate and cause you to have overhead. So what activity-based costing says is, hey, it kind of makes more sense to, instead of having one big pool, this big monster that says, hey, this is overhead, let's allocate it. Let's take that monster and let's break it down into smaller activity pools. Okay? And each of these little activity pools basically say, hey, this total overhead is broken up into this activity and activity number 3 and activity number 4. And by doing this, what it allows us to do is to select more appropriately an individual activity driver for each one of those activity pools. So when we look at a traditional costing system, you have a single overhead pool, and let's pretend there's $1 million in overhead in that activity pool. Well, we're going to select a single overhead rate to come up with a single predetermined overhead rate, okay? And that overhead rate is going to be used to apply overhead to every single job. So let's say it's $1 million divided by estimated machine hours. Well, we're going to get a predetermined overhead rate that is X dollars per machine hour. And then every machine hour that job 1 uses and every machine hour that job 2 uses, we'll allocate out overhead in that method. And in a simplistic system or in a system where the majority of your overhead is driven by mechanized operations, by those machine hours, that's absolutely fine and it should be okay. The reality is, though, not all of your overhead may be driven by that cost. So if you look on the second part of the slide here on the right side here, this is activity-based costing. So you can see what it does is it takes the $1 million single overhead pool and it breaks it down into the different activities that you do. So you can see the total cost is still $1 million. There's $600,000 in the machining activity pool, $100,000 in the purchasing activity pool, and $300,000 in the assembly activity pool. So we're still dealing with the same $1 million estimated overhead from the beginning of the year. What we're trying to do, though, is break it down into the small activities that drive that overhead. And what that allows us to do is pick an overhead driver, an activity driver for just machining, and then come over here and pick an activity driver just for purchasing, and additionally pick an individual activity driver just for assembly. Okay, so here's one of the tricks. When you're dealing with activity-based costing and you're trying to allocate cost to a job or for the year on the whole, the number of times you have to calculate predetermined overhead rate is exactly the same as the number of activity pools that have been created. So if in this example, I created 3 activity pools, therefore I'm going to calculate 3 predetermined overhead rates. Additionally, if I'm asking you to cost out, or you're being asked to cost out a job, so we're costing out job 101. And again, we know that if I'm costing a job, I have 3 inputs: direct materials, direct labor, and overhead, right? So when I cost job 101, when I'm applying overhead to that job, because I have 3 cost pools, that means I have 3 overhead rates. That means I have to apply or allocate overhead to job 101 3 different times. I'm going to do it based on each activity pool. So the process is still the same. It's just the number of times you do it. So in a traditional costing approach, if you refer back to the video that we did before for predetermined overhead rate, we said step 1 was to calculate the predetermined overhead rate based on the estimated numbers. Well, in traditional, you do that calculation once. In this example under ABC, we would do it 3 times because there are 3 pools. Step 2 of the predetermined overhead rate process is to allocate overhead based on actual activity. Again, in the traditional approach, since we have 1 activity pool, which is all overhead, we had 1 driver, therefore we allocate overhead 1 time. Under this example, we have 3 activity pools, therefore we create 3 drivers, therefore we would allocate overhead 3 times. So you can see right here for job 1, we're going to take our machining overhead and we're probably going to divide that by something like number of machine hours. And what we're going to end up with is a predetermined overhead rate per machine hour. So for job 1, I'm going to allocate my direct materials, I'm going to charge my direct labor, and then when I'm allocating overhead, based on the number of actual machine hours job 1 used, I'm going to multiply it by this predetermined overhead rate. Then what I'm going to do is I'm going to take a look at my purchasing activity. And a lot of times purchasing is based on, let's say, the number of purchase orders issued. So I'm going to take my $100,000 estimated overhead for purchasing. I'm going to divide it at the beginning of the year by the estimated number of purchase orders that I plan to issue. And that's going to give me a predetermined overhead rate per purchase order. So the second overhead I'm going to apply to job 1 is based on the number of purchase orders issued. So if I issue 50 purchase orders for that job, I'm going to take 50 and multiply it by this predetermined overhead rate. Okay? And then the third and final overhead allocation for job 101 comes from this activity over here, which is the assembly activity. So I've got $300,000 in total assembly costs. And that's probably going to be divided by maybe something like labor hours if it's manual assembly, or it could be based on the number of units assembled. Right? So let's pretend it's based on number of units assembled. So I have $300,000 in assembly costs, and let's say that I plan on assembling 300,000 units, just to keep it simple. So our predetermined overhead rate is $1 per assembled unit. Well, if job 101 is a batch of 1,000 units, well, I'm going to take 1,000 units times $1 per unit as my predetermined overhead rate, and I'll charge $1,000 in overhead. So in an activity-based costing system, your overhead is broken down, your allocation is broken down into those activity pools. So in this case, we had 3 activity pools. If I had 5 activity pools, I would have 5 overhead rates, and I would have 5 allocations. Okay? But don't let that scare you, because the reality is, you're doing the same thing, you're just doing it more often. So in a traditional system, I calculate predetermined overhead rate and apply it out. I have to do it 1 time. In an activity-based costing system, you do those same 2 steps, you just do them more often, based on the number of activity pools. Okay? So in ABC costing, there's a flow. The first thing that you need to do is identify those activities that consume resources. And then you can combine them into activity pools, like we've done here. So we've combined them into machining and purchasing and assembly. Then you have to assign the costs, estimated cost to each of those pools, and then you can just go about your business and allocating overhead the normal way you always would. Okay, but that's what ABC is. That's how it differs from traditional. Now again, the main benefit here is you can see that, let's pretend that we took a single activity pool here and we allocated it, let's say we allocated it based on direct labor hours. So we took $1 million and divided it by our estimated number of direct labor hours. Well, once you break it down into your activity-based costing in these individual pools, you can see that there isn't a single overhead item that is based on direct labor hours. Right? Or maybe we were doing it based on machine hours. Well, only 60% of your overhead is based on machine hours. The other 40% is based on other things. So by using activity-based costing, what we end up with is a more accurate allocation to each one of our jobs of our overhead. Like a single overhead pool, it does work. It's just less accurate in most cases. Okay, so when we talk about ABC, it doesn't replace job or process costing. What it is just a more accurate way to allocate overhead. So the next couple of slides are just some examples of the different activity pools and then different cost drivers. Now, the reality is it might be up to you to understand which activity driver applies to which activity pool. So most likely in questions, you'll be given a number of activity pools like purchasing and storing and machining and supervision. Right? And then you'll be given a number of potential activity drivers like POs, like square meters occupied or machine hours or number of employees. And it's going to be up to you to identify which one belongs with which activity pool. Okay? So purchasing is going to be based on the number of purchase orders. Storage is probably going to be based on the number of square meters of your warehouse space that are taken up, etc., etc. So as you work through examples of this, and over time, this becomes more kind of natural to you. You get to understand which activity driver applies to which activity pool, right? It becomes common sense after a while the more questions you do. Okay, so there's one example, and again, the complexity and the size of your company is going to probably determine the number of activity pools you have. Like you can see, this one here is quite a bit more complex. We've got 7 different activity pools, which means we're going to need 7 different predetermined overhead rates. And if I'm trying to cost out a job, I'm going to have an allocation 7 different times to that job if it used all 7 of these activity pools, which it likely will. Okay? So that's an ABC system. That's what it does. Again, the issue is that it can be very expensive to use. And again, it's based on estimates. We do all these predetermined overhead rates at the beginning of the year, so our limitation is that it's not going to be 100% accurate. We're still going to have likely an over or under applied situation at the end of the year that we're going to have to rectify, either by closing it out to cost of goods sold or by allocating it between cost of goods sold and your inventory. Okay? When would you use it? We've kind of already talked about this. The things I want to highlight are basically one of the key, to me, the key components are when you have an overhead cost situation where it's a significant portion of your total costs, right? So if your overhead is very minuscule, it's a small part of your total cost of operations, you're probably not going to use activity-based costing because the cost-benefit ratio isn't there. If you're off a couple of bucks here or there by using a traditional approach, that's probably okay because your overhead's such a small number. But if all of a sudden the scale of your business increases, right, and the complexity increases and overhead becomes this huge beast of a cost that you need to allocate out, well, you probably want to allocate that out as accurately as you can, right? So that you have a better grasp on what it costs you to run your business. So scale of business is also important. You have to be able to support an ABC costing system because it is quite a bit more labor intensive and cost prohibitive. So if you're a smaller company, it may not make sense, or it may not be feasible. You may not be able to do it. Okay, but let's take a look at an example and let's see if we can kind of convert that theory now into terms of an actual question. And what I want to do for this question, because it's quite common where you'll be given some information, and what they want you to do is not just do the ABC approach, but also do traditional approach and contrast and compare. Okay, so what we're going to do is we're going to take this information right here, right, and we're going to first of all. We're going to go through our 3-step process. We're going to calculate predetermined overhead rate. We are going to allocate it based on actual activity, and then we are going to decide whether we were over or under applied. Okay? So that's what we'll do, and we'll do that first using the traditional approach. Then what I'm going to do is I'm going to give you some additional information for the ABC approach, and we're going to go through those same 3 steps. And I'll show you that it is, in fact, the same 3 steps. It's just done more times. Okay? So let's keep it simple. Let's take a look at the traditional costing approach, right? This is what we talked about in the last video. Okay? So step 1 of the approach is to calculate the predetermined overhead rate. This is always based on estimates. So when I come up to my given information, I'm looking for estimated total overhead, and I'm looking for some type of estimated activity driver. And in this case, the only activity driver we've been given is direct labor hours, right? So that's the activity driver we're selecting for the traditional method. So what I'm going to do to get my predetermined overhead rate is I'm going to take my estimated overhead of $1 million, and I'm going to divide it by the estimated activity driver, which is 20,000 direct labor hours. Okay? So $1 million divided by 20,000 ends up being 50. And what that is $50 per direct labor hour. So for every direct labor hour that is used, I'm going to charge, or I'm going to allocate $50 worth of overhead. All right? So that's step 1. That step is done right at the beginning of the year. Take your estimated overhead and divide by the estimated activity driver. Now that I have that, I can go to step 2, which is to allocate your overhead, right? And now allocating overhead, what I do is I take that predetermined overhead rate from step 1, the thing we just calculated, that $50 per direct labor hour. And to allocate overhead, I'm just going to multiply that by the number of actual direct labor hours that I used during the year. So all of a sudden up here, I'm no longer concerned about my estimated numbers. I've already kind of used those, so I can cross those out so I don't get confused. I don't need those numbers anymore. What I do need is my predetermined overhead rate and the actual direct labor hours that were used during the year. So I had $50 per direct labor hour as my predetermined overhead rate, and I used $20,750 worth of direct labor hours during the year. So these are the actual hours that my staff worked, my direct staff worked. Okay? I'm going to charge overhead at the rate of $50 per hour used. So 50 times 20,750 is $1,037,500. Okay? That becomes my allocated overhead. This is how much I would have charged to my either my jobs or my process. This is how much I charged or allocated in overhead during the year. Okay? So that's step 2. I allocated out $1,037,500 worth of overhead. All right? The third and final step is we got to decide whether we were over or under applied for the year. And the way we do that is we take a look at the actual overhead that we incurred, so the real dollars that we paid, the real costs that we kind of dumped into that overhead account. What we want to see is, did we allocate it all out? Did we allocate more? Did we allocate less? So right now I know that we allocated $1,037,500 worth of overhead. So that's the overhead allocated using the predetermined overhead rate. We allocated $1,037,000. Okay? What I want to see is that number more or less than what I actually incurred? So what I'm going to do is I'm going to come back up here, and once again, I don't need my actual direct labor hours anymore. The only number that I really have left to deal with is my actual overhead costs incurred for the year. So we incurred $1,050,000. So if you come back down to the bottom, we incurred $1,050,000 of actual costs, but we only allocated $1,037,500. So what that means is we allocated less than we incurred. Therefore, we are under applied by $12,500. And this amount would end up getting posted to cost of goods sold, most likely. If it was a more significant amount, there is a proportional method, like I said, that you could use to allocate it between inventory and your cost of goods sold. Okay? So that's it. That's the 3-step process. Right? That's the traditional cost approach. Now, don't let ABC scare you, because ABC is these exact same 3 steps. It's just based on the number of activity pools you have, it's the number of times you're going to do this. So if I had 3 activity pools, I would calculate 1, 2, 3 predetermined overhead rates. And when I get to allocating overhead, I would allocate 1, 2, 3 overhead amounts. And then I can get to the full amount at the end, and I can just sum up all my overhead and compare that to the actual amount incurred. But again, the process is the same. So if you nail the process, you're golden. It doesn't matter how many overhead activity pools I give you. If I give you 100, you could do it. It just means that you would have to calculate the predetermined overhead rate 100 times, and you would have to allocate overhead 100 times. But it's the same process. So once you nail it, you've got it. All right? So let's move down to here. Here's our ABC information. Okay? So what I did is I took my overhead. So back up here, you can see that we were dealing with $1 million worth of estimated overhead, right? $1 million of estimated overhead. Well, what I've done is I've taken that $1 million and I've broken it down into 3 activity pools. And these are the 3 activity pools you saw on the slides. So I've got $300,000 in purchasing costs. I've got $600,000 in machining costs. And I've got, this one's a little different. And then I've got $100,000 in machine setups. Okay? So you can see that these are my 3 activity pools. So right away, if I've got 3 activity pools, I know I'm going to be calculating 3 overhead rates. Okay? You can see that I've also given you the activity driver for each pool. So I have $300,000 in purchasing costs and 1,000 purchase orders that I'm planning on doing. These are all, and it's important to note, these are all estimated figures. Okay? All of this stuff right here, this estimated purchasing, estimated machining, estimated setups, all of this stuff, it's all estimated. It's from your budget. It's done before the year even starts. Okay? So this is the information I'm going to use to come up with my predetermined overhead rates. And then here's the actual activity that I'm going to use to decide whether to allocate overhead and then to decide whether I'm over or under applied. Now, what can happen a lot of times on a test or in a situation is that you just get overwhelmed by all the numbers. You're like, holy jeez, this is way too much to look at. Okay? Get yourself into logical steps. Right? If you can get yourself down to the 3 steps you have to do, it gets rid of any confusion. Don't think about what's 2 or 3 or 4 steps. Focus on the current step. Okay? So we know that step 1 is to calculate the predetermined overhead rate. I do it at the beginning of the year. Because I have 3 activity pools, I'm going to calculate predetermined overhead rate 3 times. I've got purchasing, machining, and machine setups. The question gave us all of our costs. So purchasing is going to cost us $300,000. Machining is going to cost us $600K, and machine setups are going to cost us $100K. So those are activity pools. We also got our activity drivers that we're going to use to calculate predetermined overhead rate. Okay? Now, I've put it in this little chart format, but effectively what I'm doing is I'm still doing this little formula right here. Predetermined overhead rate equals estimated overhead divided by the estimated activity driver. Okay? So for purchasing, I have $300,000 in estimated overhead, and you can see up here it says we have an estimated 1,000 purchase orders that we plan on processing. So 300K divided by 1,000 means that for every purchase order we process, we're going to charge overhead of $300 per purchase order. Okay? Again, write these little things out so you know what this dollar amount represents. Is it per purchase order? Is it per labor hour? Is it per machine hour? What does it represent? Okay? Machining is 600K divided by the 40,000 machine hours, right? That was given in the question, which means 600 divided by 40,000 is a predetermined overhead rate of $15 per machine hour. Okay? My final, again, 3 activity pools, so 3 predetermined overhead rates. I take my machine setups, which cost me $100,000, and I'm planning on only doing 200 setups during the course of the year. So that means that for every time I have to set up my machines, I have to change the process. I'm going to charge $500 in overhead. All right? So there, again, step 1 was just calculate predetermined overhead rate. We did it the exact same way as the traditional approach, just more often. So 3 activity pools, 3 drivers. These are now the numbers that you are going to use in step 2 to allocate overhead based on actuals. So let's go to step 2. Step 2 is to allocate overhead. Again, I have 3 activity pools, so I have 3 times I have to allocate overhead. Now, what I start with is the predetermined overhead rate from each one of these. So for purchasing, my predetermined overhead rate is $300 per purchase order. So to allocate overhead, I just take that $300 and I multiply it by the actual activity driver. So if I go back up to the given information, the actual purchase orders processed were 900,000. Or sorry, 900,000, 900. So if I take $300 and I multiply it by 900, if I multiply it by 900 purchase orders, that means that I'm going to allocate overhead. 300 times 900 is $270,000 worth of allocated overhead. Okay? For machining, I'm going to take the predetermined overhead rate of $15 and I'm going to multiply that by the actual machine hours used, which are 42,000. So $15 per hour times 42,000 hours means that I'm going to allocate overhead of $630K for machining costs. All right? And finally, we have our machine setups. We thought we were going to have 200 of them, which drove drove a predetermined overhead rate of $500 per setup, but in actuality we actually used 200 or completed 210 setups. So $500 per setup times 210 setups, okay, times 210 setups means that my allocated overhead for my machine setups is $105,000. Okay, so again, 3 activity pools, 3 allocations. At the end of the day, if you add all those up, right, the sum of those 3 numbers right there is $1,005,000 worth of overhead allocated. Okay? So the third and final step again is just to decide, was I over or under applied? Now I know that I allocated out or applied out $1,005,000 worth of overhead. I'm going to compare that, if I go all the way back up, to the actual overhead costs that were incurred during the year, which were $1,050,000. Okay, so I allocated $1,005,000. I actually incurred $1,050,000. So the over or under applied means I am under allocated by $45K. Now here's the deal. You're probably looking at this and saying, hey, when we did the traditional approach, we were only under allocated by $12,500, whereas under this approach we were under allocated by $45K. Traditional seems like it's more accurate, but the reality is where your ABC costing becomes more accurate is when you have multi-product companies. So if I'm a company and I'm selling boots and I'm selling shoes and I'm selling flip-flops, and I'm trying to decide which one's the most profitable, how should I allocate overhead? I'm going to get a more accurate allocation between my boots and shoes and flip-flops if I use ABC. And what that allows me to do is to basically decide, am I selling them for the right price? Am I making money? Which one actually may be losing money? Because if you use a traditional based costing system, it might make it look like the running shoes are making us lose money and the boots and flip-flops are profitable. But when you run an ABC system and you allocate more accurately, it might show you that no, in fact, the shoes are actually quite profitable. It's the boots that are making us lose money. And what happens is companies may make bad decisions if they don't have overhead allocated accurately enough. If they just use a traditional costing system, and in that example they had boots, shoes, and flip-flops, and just based on a traditional system they decided to shut down the running shoe line. Well, what they might end up finding is that after shutting down the line that they thought was unprofitable, they actually start losing more money, right? And now that can be due to a lot of things, and some of that we'll talk about in incremental analysis when we're talking about eliminating a segment of a business. But the reality is you could have made an improper decision on which product line to shut down simply because you weren't allocating overhead accurately enough. So as you work through questions in your text, you should see when you're doing a traditional versus ABC approach, your decision changes. And again, managerial accounting is all about providing numbers or manipulating numbers and interpreting numbers to help us make decisions, right? And this is how we do it with activity-based costing. It's just a more accurate way to allocate overhead. Okay? So that's it for this video. Hopefully that kind of cleared things up, and I know it was a little bit longer example, but I really wanted to show you traditional versus ABC. So that's it for this one. I'll be posting some more soon. So cheers and enjoy.